If you want to know the next move intended to make by gold, watch this video to the end.
You got this.
Hello guys, this is Progress Serpent speaking once again. Welcome back to my YouTube channel. If you're one of my subscribers, thank you for staying tuned. If you are new to this channel currently, press the subscription button and turn on the notification bell to stay tuned whenever I post a new video. So, the last video, I told you people that let me widen the chart. So I told you people that this particular 34 moving average marks as an indicator to a kind of resistance level in the market. So when the price was at this particular candlestick, so I told you highest you to do is to add one more candlestick and then pull back. Same thing happened, as you can see here. So but that is not the case now. So I want us to look at something, because as you can see right now, there is speculations whether the market is changing direction automatically or if it is still downtrending. So let's go to weekly time frame. Let me also show you something I analyzed some time ago. Maybe some of you may have forgotten. I also posted it today in my Signal channel, and of course my Twitter handle, the Facebook handle, virtually everywhere. So you remember here, just a moment, I want to put out a trend line to make you recall exactly what I'm talking about. So when you look at the chart now, you will remember that I did something on my trading view and posted telling you that gold is going to pull back. So but in this case, when you look at this place, you will understand that gold pull back as expected, and when got into the possible place is going to reverse, something strange seems to be happening here, even though you should not always expect that the price of the market will always stay parallel at the trend lines. It's not always so. Sometimes what is happening here is likely to happen, pull back beyond the expected perfect line to create a new low. It used to happen, but in an occasion where such happen, this is where we have to then focus because of what happened here, because this is where most people now continue to speculate whether the market will continue to trend down or reverse as expected. So let's change our analysis and see what really gold tend to do. So when you look at the daily time frame, there is something significant. Let me delete this. There is something significant you are going to notice here. I told you something about these 20 moving averages and the 34 moving averages. That the sign is used to work. This 34 moving average used to work as a resistance level to the market price. So which means wherever the market gets to it, the price will reverse. I want you to look at here. Look at this place. Look at this place. And then in this uptrend that is currently in the market, then you look at this place. So why here is questionable, which is the focus. So here is questionable. Let me expand the chart again and show you something. So in this place, the price touched the 34 moving average, and instead of pulling back after developing this bullish engulfing candlestick, see this, the price broke down instead. So here you also find that instead of the 20 moving averages to cross and face upwards, showing possible buy or continuation of the trend, the 2 moving averages crossed below the 34 moving average, opening wide, the gap somehow to indicate a continuation of the downtrend. But how can we be sure where next the price is heading to? So this is now where I have to take in something different. We are going to insert shapes to be able to find exactly, or do I say make clear, the resistance, the long time or strong resistance levels, and of course the last supply and demand area, so that we know if the price has actually gotten there, or if the price is still going to continue to move down or reverse. So we have to take rectangular shape. Just a moment, let me apply it. I used to like the shape to be open, so that, or I can set it to the background, but I don't want. I just need a situation whereby you can see something very clear. So when you look at this shape, now this rectangular shape, you will see that instead of the price to resist along with this uptrend area, it broke the previous strong resistance area and instead formed below the shape. So what next do we have to look for? The last demand and supply area in the previous uptrend, and that is this place here that the cursor is waving. So what do? We're going to map out exactly the shape of, or the size of this candle, red candlestick, to see if the market price here, the current market price, has gotten to the same area. So let me insert another shape, rectangular shape. Just a moment. So I will have to change the color of this very shape, maybe to red, to indicate a danger zone. So the reason for changing the color is to indicate a possible danger zone, which means something might happen when the price of the market get to it. So now let's go back to 4 hours time frame. I will show you something. The 4 hours time frame, you will remember that I was in 1 hour, should be 1 hour time frame. I was showing you in the previous analysis a possible mini resistance in the market, and that is in this place, which I also said that the current market price will be attempting to get to that area. But then, should the current market price, that was on Friday, break this area, it means that it will start looking for the next supply area, which is around here. So this QM area, where there was, or do I say there is, a strong resistance, we are going to also mark it, and I will tell you something about it. So let's insert another shape. Rectangular shape as usual. Just a moment, let me place it. Maybe I should change the color to also yellow. That is to indicate that it has different things it is doing in the market. So now the chart is set. What are we looking at here? I told you that when the price breaks this 34 moving average, you should start looking out for either uptrend if there is resistance before its continuation, or the market will continue to pull down. Now it pulled down while the 20 moving averages remain open. So what do we do at this place? To me, it is a no trade area, and that is why sometimes Monday trades used to be magical sometimes. So these entries I make here is just two entries using 0.03 time frame lot size, sorry please, and I will tell you why I made it. Is basically on scalping purpose. When you look at this 1 minute time frame, you will see something here. There is overbought sign here, and just like I told you, when there is an overbought signal, the next thing to expect is possible divergence, and that is here. I want to show you the divergence in 1 minute time frame. Just a moment. The divergence used to go first. I forgot. That'll be there immediately when it finishes. So there is divergence here. I told you whenever there is this overbought or oversold area, the next thing is to create divergence 1, 2, and 3 depending on the market. So immediately that happened, the market started returning, and that was why I made this entry. That is why I said my entries used to be sniper entry, and as you can see here, so if the price breaks above without touching the area I expected, I'm going to close it at loss. So of course that is the reason why I made this entry. Okay, let's go back to our analysis. So here, because of the situation of the moving averages here, so we are expecting, which is the next option and the next thing to do in the market, that when the price of gold breaks above this mini resistance area, it is going to show that certainly the price of gold is going to move upwards to this area, which was the previous supply area. Let me also indicate it with a shape, and you will also see the reason why this 200, 250 and 150 moving average is important. That is what the highest resistance and the previous resistance areas is what it indicates. So let's insert a shape. This is just to also show that market can be analyzed, but I like using the moving averages. Once I look at it, I already know what is going to happen without stress. But this is just for your understanding. That is why I am analyzing the market. So okay, now the point is, because of the opening of these 220 moving averages and their attempt to cross above this 34 moving average, indicating the highest high of the day, the price is likely, price of gold is likely to trade up to this forward supply area. That is, should it break, that is, should the price of gold break this resistance, look at here, resistance area, so which is currently the recent resistance area in the market. So the implication here is, to me, uptrend is not an option, because this moving average, this 250, 200 and 150 moving average are still indicating strong downtrend, not until the price breaks it before something or someone can conclude that uptrend is about to continue. So but right now, here is still forming a stumbling block. Until the price breaks it, then we should be expecting that the next stop is at this former supply area. So that is what you should be expecting in gold. Otherwise, when this candlestick here, with the candlestick here that is currently at the price of 1931.68 gets to this resistance level and return, or do I say form the kind of the normal ranging and of course bearish engulfing candlestick, paper, all those indicators or show signs of rejection, then you should expect that the price is pulling down again and is going to break this area, which is the lowest low of the previous week. So the implication here is you should also look out for this demarker. It's currently crossed or touching at the 800 oversold line, which is not a point of sell to be until it touches this 900 overbought area. So the point I'm trying to make here is the market is not yet due for selling, except if you are scalping or trying to sell temporarily. So these are the three areas to look out for: this demarker, this resistance area, and of course, should the price break this resistance area, the next is the previous resistance area. Now let's check this. When you look at this previous demand and supply area in the former uptrend, the price of gold, or let me call it the tail of the P bar that formed in the lowest low of the price last week, touched it a bit but did not close below it. So the implication is either that the price is going to return to this same area to form a QW uptrend, overall uptrend, or it is going to break below the previous lowest low. So you should also be conscious of this point. So thank you guys. Please subscribe to our YouTube channel, and of course turn on the notification bell to stay tuned as we continue to update the channel consistently this time around, and of course to share our knowledge and trading skills and opinion to encourage others to trade profitably. Bye for now.